You throw over $1,000 a month into local wishing wells.
Of course, you idiot, because I'm wishing for more money.
This is the Keeping Your Money Show with Jamie Westenbarger and Bart Steindler.
All right, welcome back to Keeping Your Money Show. Jamie Westenbarger, joined as always by Bart Steindler. We've got a regular guest back in, Steve Brohl from Brohl Tax Accounting. How's it going today, Steve?
It's going very well. Thanks for having me.
Yeah, absolutely. So always good to have you in, especially when we're getting towards the end of the year, talking about tax planning, tax ideas, tax concepts. Had you in last month and we talked about how, the new tax code, the new tax laws have just completely changed so much about filing for taxes and how people are handling their taxes and that type of thing. One thing I wanted to ask you about, we get, Roth IRAs, Roth 401ks, it's kind of the buzz out there of obviously a very great strategy to have money in those, because when you retire, you can draw out of it and not have the tax implications of, like a normal IRA or 401k. I'll give you an example. We just had a client, they've only contributed to Roths in their 401k, pretty much their whole lives. They've been lucky to work for companies that have had it available. And they're going to retire with a significant amount of money. And the beauty of it is everything they take out is going to be tax-free. They're not going to have to pay taxes on it, and it's not going to impact their Social Security and all these other things that, with qualified normal distributions can have, a major impact. But we hear a lot about conversions and, how do I convert to a Roth IRA? Should I convert to a Roth IRA? Anything going on, I guess, with the new tax laws and everything that impacts this or has an effect on it that, people should be kind of maybe looking at if they hadn't looked at it before?
So one of the significant changes with tax reform is that starting in 2018, when you convert to a Roth, you can no longer revoke that conversion later on. Okay.
So just to clarify, prior to this, in the beginning of the year or any time during the year, you could say, I'm going to take this $100,000 of IRA money, I'm going to make it a Roth, I'm going to pay the taxes on it now. But then at the end of the year, if something had happened, maybe the market went down, you'd lost some money or something, you could change your mind and take that back to traditional IRA status.
Yes.
And now you can't.
Yes. Before you had until the extended filing date in order to recharacterize that conversion. However, as you just stated in your example, there's obviously a situation where you could abuse or take advantage of that. And it probably benefited your high earners more so than your average Americans.
Mm-hmm. Yeah, and I mean, I can see a situation where, it's really almost risk-free if you have the money to convert everything. See what happens. If the market did really well, you just kind of bonused into this this Roth money at a much higher value than maybe what you originally had converted it at. So that could be a significant benefit, and I could see why people would say, or why the government would say maybe this is being abused a little bit more than we would like to see.
Even more so, it's my understanding that you could convert different asset categories, and based on how that asset category performed by that extended filing date, 9.5 months after the year, and you could recharacterize certain asset classes.
Now, one thing with that, though, from a recharacterization standpoint, they are still allowing that if you screw up, which is nice, right? Because, I mean, rather than penalize you if you made a mistake, you actually have the ability then to fix it, I guess.
Yeah, that will continue to be the case if funds are inadvertently transferred to an incorrect account. Whether you were converting a non-qualified account to attempting to put it into a Roth, but it made its way into a traditional, you can still recharacterize that. Another option is a 60-day rollover, but you prefer to recharacterize.
Okay. Anything else when it comes to Roths or anything in regards to new tax law changes that are important? Or
Sure, yeah. So because of tax reform, we see on average, lower income tax rates for taxpayers. So now is a relatively good time to convert to Roth. If you ask yourself, 20 years from now or 10 years from now, when you're in retirement, are you going to be paying a higher tax liability or a lower tax liability than you currently are? Mm-hmm. If you think in 20 years from now you're going to be paying higher taxes than you currently are, then it might be a good time to consider a Roth conversion.
Well, and I think a lot of times people ask, well, like, how would I know? But I mean, we're not getting any less debt in this country. As our government racks up another trillion here. I mean, what's another trillion here or trillion there, right? But I mean, we have to look at that and consider the likelihood that we will all be in a lower tax bracket later in life probably diminishes every single time we end up with another, $1 trillion of deficit or debt. I think the other thing that falls into that category too is just how Roth distributions do not count against you when it comes to your overall income picture. So when we talk about like taxability of Social Security or the cost of your Medicare, Roth distributions aren't figured into that equation like other distributions are. So if you took $40,000 out of your IRA, that is added on to your Social Security income, which is at half, but it's still used as part of the calculation on how much of that Social Security is taxable, whereas a Roth withdrawal is not. I mean, that in itself, even if you were in the same tax bracket, realistically could save you significant money over a long period of time.
Yeah, I can see that. I mean, you're definitely doing yourself a disservice if you get to your retirement years and you don't at least have a small stash of Roth money sitting there, especially for when you have like the one-time expenses,
right?
Such as you're replacing a roof or buying a vacation home or something like that. Because if you took a large chunk all out of your traditional 401k or traditional IRA accounts, that's going to be significant tax hit.
Oh yeah, and I mean you'd have to take that much more out potentially just to cover the tax implications of the actual money you needed. Mm-hmm. So yeah, we use Roths in that way a lot. And I think this is an important point to make when you talk about, we discuss asset allocation all the time, and everyone knows you should have some stocks and bonds and growth and value and all of these. We all know about asset allocation, but so often we don't talk enough about tax diversification and tax allocation and realizing that having a little bit of, a little bit here and a little bit there of various different tax, treated accounts makes a huge difference in retirement, because even having accounts that are taxable that you've been paying taxes on all along, if you need to sell something in there, you're paying capital gains versus income tax. And so there's really benefits in diversifying across all of those if possible, just like you would diversify across all asset allocation. All right, well, Steve, thanks for coming in. I'm sure we'll talk to you again soon. If you have not been doing any tax planning, if you think it's status quo like last year, you are unfortunately very wrong. You should definitely sit down with a qualified CPA to review your situation and make sure all those deductions that you're used to taking are still going to work out for you. You can reach Steve right here in our office. 888-98-MONEY is the number. 888-986-6639. That's Steve Brohl, CPA, located right here in our office in Grand Rapids. All right, coming up, we're going to wrap up the show, send you into the weekend right here on the Keeping Your Money Show.
There's no one-size-fits-all when it comes to planning your future. Jamie, Bart, and all of the advisors at the Keeping Your Money Show understand that your financial goals are unique and your needs are going to change at varying stages of your life. Our team of advisors can help you tailor a financial plan that meets your unique needs. Call us today at 1-888-98-MONEY or visit keepingyourmoney.com to schedule your free initial consultation.
Kylan Law provides clients with the clarity and confidence they expect from attorneys that live and work in the evolving business world and your community. As the owners of Michigan-based businesses, our attorneys bring insight and real-world experience to the firm. Kylan Law is your resource for estate planning, helping your family with effective strategies and solutions. Kylan Law, your business, your estate, your law firm. Contact us at 855-453-4536. or at kylinlaw.com.
It all comes back to money.
This is the Keeping Your Money Show with Jamie Westenbarger and Bart Steindler.
All right, welcome back to Keep Your Money Show. Jamie Westenbarger, joined as always by Bart Steindler. It's first weekend in November. Woo, crazy.
It is. I'm going to see the hockey game, the Griffins game tonight.
All right, are they
Gonna
in
have
good
a good
this
time. They've been struggling.
Okay.
They've been struggling. Yep.
Yeah, kind of a rebuilding time frame in the whole Red Wings organization, but we were kind of blessed with a couple decades of kind of supremely good hockey.
Well, you know, a lot of times too, especially with the minor league team, that these guys haven't played together very much, and then players come down and players go up, so the chemistry of the team improves over the year.
Sure.
So I've noticed that with the Whitecaps and with the Griffins, that a lot of times as the year goes on, they get better and better, and their win-loss record improves. But the games are fun, they're exciting. It's a good value.
Oh yeah, you can't beat
Saturday
the
night.
cost for a weekend at the hockey rink for sure.
Another good thing going on in downtown Grand Rapids right now at the Grand Rapids Art Museum, if you're a sports fan, is there's an exhibit called Who Shot Sports, and it's an exhibit of sports photography. It's really pretty good. So
That sounds interesting.
Another good thing that doesn't cost a lot of money to go entertain yourself with.
Have to check it out. Well, I'm headed to Missouri to chase after Bambi's dad, and for all our other hunters that are heading into the woods over the next week or two, best of luck and be safe. And next week, come back earlier than you did if you missed any part of the show. We run every Saturday from 9 to 10 right here on WBBL and all across the country on our podcast, which you can find on iTunes, Google Play, SoundCloud, YouTube, and Stitcher. We talked about buyouts to salaried workers through GM. IRS is announcing higher retirement plan contributions, why teachers' plans sometimes stink, and Steve Brohl from Brohl Tax Accounting was in to discuss end-of-the-year tax planning. If you missed any part of the show, you can always find it on our website. Just go to keepingyourmoney.com. If you're not following us on Facebook, do it now. Grab your phone, go to facebook.com/keepingyourmoney, like and follow our page, and you'll get all our updates of things we've got going on, like the event we did last week with the town hall meeting, and various other things, as well as what we'll be talking about on the radio show next. Well, I'll tell you like I tell you every week, you'd never go on that trip. You'd never go on that vacation. Maybe you're planning a holiday getaway. Maybe the idea of the imposing winter that's knocking on our door has got you thinking about warmer destinations. No one ever just shows up on a beach hoping there'll be a hotel available. I've never seen someone walk into an airport with their bags without have first bought an airline ticket to go wherever they want. I'm sure it happens, but I don't advise it. And you surely don't want to do that with your retirement. If you go into retirement with the idea that it's a destination, you're going to miss out because it's really just the beginning of the next 20, 30 years of your life. And if it's not planned out properly, if you don't have an income distribution plan, you could be very, very unhappy with the end result. Let us help you. Give us a call. 888-98-MONEY is our number. 888-986-6639. For everybody here at the Keeping Your Money Show, Dan Van Singel, Shane Thorson, Nate Boonstra, our buddy Troy Fox out on the lakeshore, our wonderful producer, Laura Reidenauer, my compadre, Bart Steindler. I'm Jamie Westenbarger. Have a fantastic weekend, and thanks for listening.
Registered representatives offer securities through Securities America, Inc., member FINRA SIPC. Financial advisors offer advisory services through Securities America Advisors, Inc. Forest Hills Financial, Inc. and Securities America are separate entities.